Hey everyone, I'm Cary Smith and I'm sitting here with Cheri Turner,
Hi.
and we're both with Client First Capital. And Cheri, today we're talking about what I think is, if people are out there searching financial topics and or watching YouTubes to learn more about financial topics, this is probably the number one topic they're wanting to learn more about, and that is having the right tax strategy in place. So you're the expert here. So tell us more about today's topic
Right.
and what we're going to cover.
Sure. So today, which feels timely for end of year, we're going to talk about the top 3 reasons to have a tax strategy in place. So a little bit different than just saving on taxes, but having an actual strategic approach to your taxes.
Yeah, I
Uh,
like that. I
mhm.
like, so a lot of people have tactics that they can do to make sure that they're reducing their tactics, but usually that's focused on this year or the past year, as you're focusing on the past year's taxes as you're doing your taxes. But a
Mhm.
strategy is different, it's broader, right? So if I'm going to
Right.
have a tax strategy, I'm not just looking at this year, but I'm looking at next year and probably several years into the future, right?
Mhm.
Where it's more thoughtful, more deliberate, and so yeah. So I'm excited about this topic. So tell us
Yeah.
more.
Sure. So the first and primary reason why most people would want to have a tax strategy is obviously to reduce your tax liability or save on taxes. So for most people, the primary objective is to keep more money in your pocket. So by having a tax strategy and reducing your tax liability, you essentially are able to do that. Approaches that you can take in order to do that are ensuring that you're optimizing your deductions. Now, the majority of people do currently claim the standard deduction because it's so generous currently. However, there are strategies and ways that you can find certain years in which you can optimize and do your uh, deductions. And you also want to ensure that you're optimizing and taking advantage of any and all tax credits that you might be eligible for.
Okay, so deductions, credits. So Cherie, would an example be here? Let's just say that I give regularly to my church. I plan to this year, or and also plan to do it in future years, or an organization that I care about, a charitable organization. Would this include things like maybe me lumping all of those this year's and future year's deductions into one year so I can
Mhm.
maximize my deductions? And so, would it include something like that?
Absolutely. That's a great example, Carrie. And in fact, that's one of the points that we're going to talk to in the next video. But
Okay.
that's an excellent example of a way that you can absolutely do that.
Okay. Very good. Thanks, Sheree.
Yeah. And so the other way that you can reduce your tax liability, aside from your deductions and credits on your tax returns, are by optimizing and taking advantage of the different investment types. Now, the first of those opportunities would be any and all tax deferred retirement accounts, right? So if you have retirement accounts at through your employer, then you want to ensure that if you're able, you're optimizing those and maximizing those and ensuring that you're always getting the full and maximum match if your employer is offering a match. This is also an excellent opportunity for individuals who are self-employed. By establishing your own retirement plans, your opportunities to give and contribute are actually even higher, even better. Another way to take advantage of different types of investment types are for individuals who are in a high tax bracket. Municipal bonds can be an excellent way to help reduce your taxes because you save on both federal and sometimes state taxes as well with different types of municipal bond investments. The third way is through capital gains management, which means by looking at your performance of your investments over the course of the year, and by optimizing and balancing your capital gains and losses. If you've had high gains, then looking for any opportunities where perhaps you had losses that could help to offset some of those tax burdens.
Hey, Sheree, those are really good points. You talked about making sure you're taking advantage of your employer's match.
Mhm.
And so, maybe a financial planning, retirement planning rule you don't hear that often is don't turn down free money, right?
Exactly, yes.
Make sure you're taking advantage of that. So that's a really good
Yes,
point. Okay,
yes.
Cheri, so this was video 1 of 3, where we're going to just go deeper and deeper on tax strategies. And so I think we're off to a good start with this video. And so good job.
Thanks so much for joining us. Please, if you've gotten value today, please do like and subscribe so that other individuals can find us easier. It helps with the algorithm as well.
Okay,
Yeah.
and again, you can find us at clientfirstcap.com. If you want to know more about us, or if you want to speak with us, you can schedule an appointment. Thank you.
Thank you.
All right.